Hello, today is the 27th of August, and I just wanted to add a voiceover for today's replay because there was a very beautiful setup that formed. Made perfect sense. I did not take it, but in my edge, it's shown that it's essentially the same setup. It's a reclaimed setup, so I wanted to just explain that for myself. And if there's anybody else watching, then I guess you can learn a thing or two as well. So we're looking at the NASDAQ here, MNQ. So what are we looking at here? When we started off today, the first thing I always do is go over my 15-minute supply and demand zones, support or resistance zones, if you want to call them. And I just do that by looking at the wicks of major movement. So we had it from 3 sessions ago over here. We rejected that here. So this resistance zone was a very viable zone, especially in pre-market, because we were tapping into this zone and kind of struggling to get anywhere here. We started selling off from that zone right here, and pre-market I noticed we're kind of going down. In pre-market I also looked at this zone right here, right over here. I'm gonna make that a different color so you can see. So this zone right here, because in the 15-minute, as you can see, it came down and then it started pushing up from this area as well. So we look at the wicks on the 15-minute and we look at that doji. So I'm thinking, okay, so this is a very good area where market pushed off. This is a viable zone as well. After that, I looked at yesterday's session as well. So yesterday's session, we have one zone we pushed up from here with the wicks as well as the major move near the close of yesterday's session. And we also have this yesterday's pivot zone right here. So what I learned today was really cool. Actually, today there was 2 things that were learned by watching price action. Number one is what I call a internal or continuation zone. This could be bullish or bearish, and then pivot zones, which also bullish or bearish. So pivot zones are very clear retracement and bounce from a certain area. The 15-minute wick, that's what you look at as a pivot zone. So as you can see on yesterday's session, let me delete these right here real quick. So yesterday's session, we rallied in the morning, retraced back, we created these big wicks until finally pushing up. And on the 15-minute, you kind of have to visualize which one you are going to consider a pivot zone. So after a lengthy rally, and after some time, if it comes back down and then re-rallies or bounces or rejects for bearish scenarios, basically that signifies a pivot zone. You obviously have stronger pivot zones. You could even, to be honest, if you're really looking at it, you can consider this somewhat of a continuation zone, because you're like, well, it moved from here all the way here and this is just in between. So that's more of a continuation. But as far as I'm concerned, because I scalp, for me, this is a good pivot zone because it came up for a good lengthy amount of time, really tried until retracing back and bouncing again. So that's a good pivot zone. So this is also a good pivot zone. I didn't mark this off because this is quite a ways down. I didn't really see myself or the market selling off right here. My target was different. So I looked at this pivot zone from yesterday, looked at another zone right here. This is a more clear example of a continuation zone. So not a pivot. It's not like it really went and retraced. It's more like a very tight move, and then it retraced very quickly until relaunching itself. So this entire thing, I would say, this entire move right here, that's the move, right? And in between that, you get a bullish continuation zone. So understanding zones is very simply, first we want to identify the fresh zones. So I don't want to use these wicks, anything like that, because they've been bought into, price traded into them. So I look at the wicks when creating my zones, and I want zones that are fresh, that have not been tapped into, that have not been traded into, right? Especially candle closure, right? So these were fresh. This area right here, it was a very nice continuation zone. This was a pivot zone. And the pivot zones are usually stronger than bullish continuation zones or continuation zones in general. So you can have actions like this, which makes perfect sense when you look at it that way, that it blew through the continuation zone, but then it held the pivot zone, bullish pivot zone. So that's one thing. Identifying the 15-minute levels, the 15-minute supply and demand zones, the pivot zone versus continuation zone, and I'll quickly throw in the way you identify 15-minute zones. I really understood this a couple days ago, to be honest. It was very clear. I don't know why I didn't think about this. It was very simple based on market structures, right? So if you have a zone and a retracement and a bounce, if it clears a previous high, makes a higher high or a lower low, that's a very good way to identify bullish or bearish zones on your 15-minute chart. So it has to break market structure and close as well. So it can't just wick up. Okay. All right. So these were the zones I was looking at this morning. Okay. As market opens up, I am looking at the 10-minute because I trade on the 10-minute. I keep my eye on the 1-minute as well, but I really trade the 10-minute. And my whole system is very easy. I just look at an inversion of my zones. So that's a very weird way to say I just look at a break and retest setup. Okay, it breaks the zone, retests the zone, and then goes to my target. Okay, couple of things that are important to understand is now liquidity, right? You see these wick lows, right? This one as well as this one. These are all liquidity points. And what's important about liquidity is the market usually likes to chase liquidity, and it's a very good indicator on whether you should get in on a trade or not. And in the live replay, you'll see this first trade. So ignore this for now. So the first trade was actually here. Okay. This was my actual trade. I didn't take this second trade. I just kind of saw it play out. But the first trade you'll see is market opens up at our bullish continuation zone, and it tries to buy back up, but then it starts selling off. Okay. And I took an NCIE entry, which is a non-confirmed inversion entry, meaning the 10-minute did not close before I entered. So this was a break setup, not a break and retest. So that was also a very important point to understand, that if it's a very fast break setup and I'm not waiting for the retest, I'm going to get out super fast. It's a very super fast scalp. I don't like to stay in for too long, right? Because it's also the first leg of the move. It's the first time it broke the level, right? If it broke the level and then kind of did this, and then came back up here again, and then started going down, that's a second leg of the move, right? So that essentially market basically broke my level, confirmed the closure, retested the area, coming back down for liquidity here. But here's what I noticed based on volatility. Okay, volatility wise, this really started breaking down in the 1-minute time frame and really started pushing. So that's when I get in on an NCIE entry on one contract, and then it kind of retrace. I get in with the second MNQ contract, so 2 contracts total. My average entry and exits you can see here, and I targeted the next zone. I didn't really want to chase the very bottom there because it was very aggressive. Order flow was fairly bullish. This part was kind of in between for me. So if it's very bullish, but then you see it stalling out, right? So it could turn bearish. So I don't have a direct bias on whether it is a bullish order flow or bearish. Basically the trend could be just sideways. So looking at that, I got into an NCIE entry here and really tight profit target, and it worked out, and I was happy with that. Not exactly my bread and butter 5-star setup, but it's still used concept. It's more like for now, I'll just give it a B rating, for example, like a B- or a C+. Okay. Here's the important thing. Here's where liquidity concepts come into play. So after the first candle closes and I get my profit target here, what I notice is it taps liquidity. So it clears this liquidity right here, right? So it clears this liquidity pool right here, not the farthest one though. But it clears this liquidity. We're at a bullish pivot zone, which is deemed stronger. And then it starts to bounce. Eventually came back to my continuation zone. Now, at this point, I'm thinking, well, my bread and butter setup is break and retest. It broke, it closed, and now we're retesting this area. Okay? So as we're retesting this area, let me play this for the next candle. As we're retesting this area, I'm thinking, oh, technically I should get in because that's just my setup. But then I started thinking about it. We broke through, we grabbed liquidity, and all of a sudden I wasn't really keen on it. Look at this retracement. It's more than 50% of the candle body on the sell-off candle body, right? Yeah, it's retesting, but it already cleared a liquidity target. And I was not super confident in taking this retest back short for this liquidity because we're also bouncing off a pivot zone, which is stronger than a continuation zone, right? So continuation zones are weaker than pivots. And I'm not saying that doesn't mean it can't continue to go lower here. Market could just retest and go and be like a nice bread and butter setup. However, I wanted to sit this one out because it already did flushed, ate up 50% of the candle after clearing liquidity at a pivot zone. So there's a lot of thesis here on this is a very strong zone. Okay, unless we have a very clear sell side bias, it could be hard to break this area. Okay, and because we cleared liquidity, there's no close target left. The next target you'd have to look at would be this area right here, the farthest liquidity. Okay, again, not saying it doesn't happen. I'm just saying based on volatility, I'm noticing that, you know what, maybe I'm just going to sit this one out and see what happens. So that was lesson number one that I was very aware of in my trading, is liquidity and pivot zones versus continuation zones, one stronger than the other. So I wanted to stay out because if we cleared liquidity and we're bouncing off of a very strong demand zone. Okay. What's the next lesson? The next lesson I learned is, well, this next bar. Next bar, next 10 minute. So at this point, I'm just price watching. You'll see this in the live replay as well. So I'm just watching price. What happens to price? This level, it broke through this level. And a part of me is like, well, technically it broke a level. I wonder if it's going to just do a retest here. And I was kind of fighting with it because I trade just an inversion. I'm thinking, well, we broke through it. Do I really want to use this zone anymore? And as I watched the system and the trade and the price play out, I learned that, yeah, you can use it. If it's what I call a first degree reclaim, meaning this is a zone, we broke this zone, right? This is a bullish zone, okay? There's a lot of orders here and we bought up here. We broke to the downside and thus inversed this zone. So now this zone has been inversed. I usually look for a break and retest, so that means it inversed, closed, retested, and continues. That's usually my break and retest setup. Reclaim zones is exactly what it sounds like. You break it and then you reclaim it. Okay, so it's again a bullish zone now. It's not an inversed zone that you're looking to take as like it didn't turn into resistance all of a sudden that you take short anymore. Instead, now you can take this as support again, right? So instead of inversing into resistance, it still continues as support and we go like that and take it long. Right. So again, I'm not super comfortable with reclaiming, but now after seeing price action today, it really solidified a lot about what reclaiming is. And so far, I'm seeing a first degree reclaim fairly valid. Okay, first degree simply means it broke once and then it reclaimed. Okay, it only broke once. That's first degree. Second degree would be something like, there's my other alert. So it must have gone up here, I think. We'll take a look at that later. So second degree reclaimed means it broke once, reclaimed, broke again, reclaimed. So these points right here, every time you break and inverse the level, that's a degree, okay? And why I don't like looking at these is because the more you buy through a zone, the less desirable it is, because now you're kind of like in a consolidation and it's not very clear on who's going to win in here, right? It's not very clear. Are the buyers winning? Are the bears winning? And all the orders are kind of like, it's not very clear of a demand or supply zone, okay? However, after today's price action, I will honestly consider a first degree more often than not. If it's immediate, meaning you sell off inversed and immediately bought back and reclaimed, then I'll do this. If I get stop loss and I get kicked out, then it is what it is. That's just part of trading. So that's exactly what you will see here. A break and retest setup on a reclaimed zone, which is mind-blowing stuff. First degree break and retest. Broke, immediately started reclaiming it. And now the setup says, well, in that case, we're looking for longs back, retesting this area, going up. So then you're questioning, okay, where are we going up? And this is lesson number 3. Lesson number 3 is once I take it off of replay. Actually, before I do that, let me just demonstrate the break and retest here, right? So now you open, and that's basically it, right? You'll see this in the live recap there, but it basically retested this zone again, break and retest, and then went. So then lesson number 3 is profit targets, high probability profit targets, PDC gap, prior day close, which is basically the opening gap, right? And you will again see that in the live recap. Gaps make very beautiful price targets. This second trade was way better. This is like really nice. But again, I'm not very keen on taking reclaimed setups. Today, I was just very aware of continuation versus pivot zones and how they react, as well as reclaimed first degree reclaimed zones. So I'm not super experienced in taking these setups. But the thesis was in my head and I was watching it play out and it was beautiful. It was way better than this NCIE trade because it was a confirmed close, re-entry, bouncing off, very beautiful gap target as well, right? So if I take this off of replay, what you'll see is this dot is yesterday's session's close, which is the gap, okay? And if I take it off of electronic trading hours into regular trading hours, that's basically where market closed last night. And if you know anything about a gap, you know that markets tend to fill gaps most often than not. So that makes a very beautiful target. So here's the beauty of learning all of this and finally coming together with it. So if we go back now, what are we learning? Let's say market opened here, okay? Market opened, even if, say I didn't take this first trade, okay? Market opened, we dumped, okay? We broke through a continuation zone. We broke down into a bullish pivot zone, okay? We cleared liquidity. This is a very good support, bullish demand support area. We then continued to bounce, okay? We bounced and then we reclaimed the continuation zone from yesterday. Fantastic. I want to not anticipate. Instead, I want the market to show me what it wants to do. We reclaimed it to the first degree, retested this bullish continuation zone. So now it's a break and retest setup on a first degree reclaimed zone. And guess what? Now it finally comes together. Here's your entry, retest. Here's your stop, other side of the reclaimed zone. And why are we going to move up? Why are we not going to move down? Where are we going? What's the draw on liquidity? The gap. The gap is a very strong draw on liquidity. Yesterday's close, and if it creates a gap, very, very strong draw on liquidity. Market likes to fill the gap. Very clear break and retest. Get entered in. 4.63R. Beautiful gap up at the top. And guess what happens? Guess what happens even over here as it breaks this other bullish continuation zone? Closes, retests, gets the gap. And then look at what happens after we get the gap, right? It kind of starts going a little down, maybe creating a bull flag here and then slowly going back up. Wicked all the way down here again into the zone. But again, I only trade until 11 a.m. I don't really care what happens after 11 a.m. And this was a very beautiful setup. Today, I learned a lot about my system and my edge and finding a more interesting variation of my setup. It's still a break and retest. It's just a reclaimed to the first degree. First degree retests are fine if it's immediate. because price and action and the bulls or bears still fighting it out. That's very good. If price is jumping through this and is completely annihilating this zone, we don't want to even look at that zone anymore. That zone is done. We want to look at fresh zones that has not been taken. Okay. And look at that, right to the gap. So I could have just taken this 4.63R trade instead of taking my more, adrenaline filled 1.2R, right, NCIE entry, because the market already moved, never retested. And when it did retest, it just broke through, right? So I could have taken this one instead, which would have been a better trade. How cool is that? The more you focus on just trading for the fun of trading, and you focus in on your setup and your system, the more you start making sense of the market. Trading should be simple, super simple. Here's a level, it breaks, retests, and it goes. Here's a level, it breaks, bounces, reclaims, retests, and goes. The gap, beautiful DOL, right? If the gap wasn't present, I'm sure market would have moved very differently, right? You could have had the market, if the gap wasn't there, you could have had the market come back up here, fake people out, and then immediately go back down here and stopped you out, right? From this upper bullish continuation zone, if we're doing something stupid like retesting the bullish continuation until going all the way back down and then finally pushing up into the bearish pivot zone, right? I've seen markets do stuff like this all the time, right? That's why I was a little hesitant until I started realizing, like, hey, there's a really good draw on liquidity, which is the gap. Market likes to fill gaps. We have reclaimed, and it all started making sense. I still didn't take it. I just wanted to see it play out, and it did play out, confirming my understanding and thesis of my zones, my setups, as well as price movement, which is great. In the future, I'd like to see this setup, and I'll take it 100%. 4.63R, completely okay, right? And that was really because the gap was present, because there was a very strong need to fill a price point, okay? So that's basically what you will see. You can see the price action. Again, watching price action daily will just make you better at understanding price. It'll help build patience, because I trade on the 10-minute time frame, so all of this is super slow. But helping in understanding your zones, right? How to create a demand zone, supply zone, what's a pivot, what's not a pivot, how do these pivots play out, right? How to take advantage of your setup, and what are the different variations of your setup, right? One is a clear break and retest, classic. One is a reclaimed break and retest, and that's something you gotta look out for. The gap is right here. Understanding order flow, right? If you're like, I'm in the order flow, I opened market around this time. I'm looking at this as market rallied, stalled out, and now we're going down. Order flow could be to the downside today, 100%, right? I was leaning more bearish today than bullish. And until we got to this pivot, I'm like, let's see what happens. It cleared liquidity, and then the next candle is this way over the 50% line of the previous sell-off candle. It still could have gone down, right? When we were in this area, right? When we were in this candle after the retest and it started closing red again, I'm like, okay, well, this could 100% be a clear break and retest. Retested, now it's pushing down, and out of nowhere, it started buying back up again. So knowing risk management, following just a basic system, simplify trading as much as possible, and just enjoying it, you'll learn so much so fast. It is crazy. 4.6R, I will take that trade any day going forward. And I'm glad I was able to wait, build the patience to see my setup. Look at this boring 10-minute candle. Every candle I see here is just slow, super slow. Takes 10 whole minutes to clear, right? And that builds patience. That builds the understanding that trading should not be your everything. The more you become desperate about trading, the more you lose, right? Have something else in your life you want to do, right? Have some fun in life, do something else. Trading should not be everything, because when it is everything and this is all you really want to do, or this is the only thing you really stress about, this is when you really fail, right? Because you overcomplicate, you overanalyze. It's important to just take it and breathe and move on. Keep your mentality in check, right? I know obviously as traders, aspiring traders, there'll be moments of your life where you're really trying to figure this out. This is all you think about day and night. It's hard not to. I get it, 100%. But when you do find a system, as simple as it is, trading should be simple, and it clicks with you, just do this and move on. How do you not stress too much? Risk very little amount. How do you not stress too much? Don't worry about making money. Just focus on everything else in life and you'll be fine. If you really care about just making money, you'll lose, right? If you care about over leveraging, you'll lose. And then you will start taking trades as money instead of setups, right? Because this is money, this is money, that's money, this is money. Every candle is money, right? And all of a sudden you're not caring about what the market is doing or what the setup is. Focus on something else, have fun with it day in and day out. This is a slow process. The 10-minute candles are a slow process. And that's just it. So I hope you learned something. I hope you enjoyed. I will push you to the live trade. And again, if you like my content on me building my edge and just watching price action, again, I really started this channel just for myself. But if you enjoy it and just watching price action for most days that I trade, just how markets move, go ahead and subscribe, go ahead and like. Thank you for watching, and I'll see you guys on the next one.